So in context with everything that I told you, right? Because you learn fundamentals by just being in my group, honestly. All the fundamentals are explained. You have bank reports, why things happen, and you have a limited answer like questions that you can ask me about fundamentals. And like I said, if I don't know the answer to it, there's somebody who's been trading for 15 plus years that's ahead of me in the game that will know it, that I have access to. So you can ask me any question about fundamentals and I'll be able to find an answer, right? Within 24 to 48 hours, reasonable. So obviously. Um, in this video, we're going to be going over the algo price pattern that happens quite literally every single time for buys and sells. I'm going to do a couple of examples, and this is in context with like the displacement and things of that nature that you see, the preciseness of that displacement and things like that, and the high resistance liquidity for, right? Um, just for the time being. So every single time there is a low swept. So in this case, there's this low right here. As I said, we have the displacement that usually occurs. Just another bit for you guys. We have a displacement that usually occurs. This is a run up to let everybody know that we are indeed buying. And then we have a high and a low established here. So I have this a low here and a high here established. And then price came down, swept the low first, swept the high, displacement happens. Price came back down into the daily imbalance, hit right here beautifully and perfectly at this POI. And then they did fail to sweep this right here, even though it looks like I was zooming in quite a bit. They failed to sweep this low right here, showing me that we are now going longs, right? And prior to that, we had a high and low kind of established internally, and we swept the low first um, down here, and then we failed to sweep this. So this qualifies as a strong low. So after that happens, when price is truly going up, this is for setup two, and this also happens in setup one as well that I discussed. Um, and this also happens on displacement as well. When you have set the limit orders, the same thing happens every time. All right. So we have a price action pattern that's left every time. And this is just something that I physically notice happens every time. I've been trading this exact same way, technical wise, for years, for about 5 to 6 years now, pretty much my entire trading career. So I've done a lot of struggling, a lot of looking, a lot of finding out over the years, a lot of documenting trades, and these are things that I physically noticed, right? And this is meant to be an add-on for something for you to look for in context. Its fundamentals, obviously, and its confirmation. None of this is valid unless fundamentals are in line with the direction, right? So remember that. Typically after either a sweep happens or after they fail to sweep, one of the two, there will be a price action pattern that's printed, right? You'll have, actually I just use this, you'll have this one candle on the left, one candle on the right, and one candle longer than the others. The wicks of the other two candles, right, will not exceed this wick. So the wick of this one, and you'll have 1, 2, and 3 every single time. And the price typically 100% of the time shoots up from there. The only thing that changes that and validates this is if you have a change in fundamental suddenly and this ends up plummeting, right? That's about it. Um, Here, that's one for a long, and this happens for longs and sells. Let's just go to GJ. Same thing happened here. This is setup number one that I was referring to. You can see it and zoom out a little bit so you guys can see the displacement that occurred. You had an extreme low swept into a multi-order block, an extreme high. I swept it, came back up. We had a really big build up all the way up to here. And if you notice, you can take counter trend trades and counter fundamental trades because this is the how liquidity moves. Once you get good enough to fluctuate in the liquidity or however you enter, you can begin to look for the same confirmations long and expect price to go long after the displacement after the sell size is being swept in context with you expecting a displacement. So this is how you take counter trend trades right here, right? As well. So when you get to that point of being able to filter liquidity and things like that, then you can take the long here, wait for the displacement to happen, and then set a limit here for another one later on in the future, right? Some people are that good. I have personally haven't gotten there to being able to counter trend trade really well, but I do get a few that are irresistible every once in a while, and I will take them. But those I keep my risk down to about 0.5% on all counter trend trades. But you can see that happened, right? Not bad. We split the low right here. Let me move this out of my way. We split the low right here in order to go long and have the displacement. And it was the same thing, right? And then a little bit, we had a low and then two candles on each side, and they never exceeded that. It's the same pattern. What did it happen right now? After a sweep, and then price came up and we had a longest going, right? This is just things that I physically noticed every single time. When I tell you I studied price, I have my PhD in price, just about. And then in the current situation, same thing. After the displacement that I showed you happen, right? After that displacement, sell side and buy side being swept, price, ended up taking up one more high, and we can expect that. You might even take some more highs up here, but you can see how choppy this got until they were actually ready to plummet and come back down into the POI that was in discount in this case, right? I actually did think about hitting a limit here the other day, and I should have, because we would have had this entry right here if I would have, but that's okay. We can still get in on the high resistance liquidity void on the way up. My point was to point this out, right? Let me just move this out of the way real quick for now. They failed to sweep this low. This candle, this candle, this candle, and this candle tried so hard, but they failed to sweep this low. And this is number one when there is no low swept, and we just have displacement and then price coming back and hitting that POI beautifully in order to continue up, right? And they do count this and then this as the displacement. It's pretty much only when they want to take more liquidity when they do that. If they don't feel like they need to take any more liquidity after a previous displacement and it comes back into the range for a long situation, they won't. They'll just hit a POI and then continue up from here as you've seen. But what I really wanted to point out about this setup was the fact that here it goes again. We have a low, right? It's lower than these lows. Look where my crosshairs are. And then we have two on the left and right side of that lowest one that don't touch it. What did price do after that, right? Exactly. So I've been noticing that a lot lately, even for short setups. Let's just say GBP USD was recently enough short that we can go ahead and look at that. Let's just say right here, right? Major liquidity swept right here for buy side liquidity, and this was on the daily time frame, I believe. So I marked that up. It was very defined. And then we had the same thing happen here, right? We had a candle on the left, the right, and then one in the middle. A candle on the left, the right, and then one in the middle. And they never exceeded that, right? Going down, we continue short, taking out sell side eventually, and ultimately to get sure that we were short. We even had a displacement. A low was established, a high was established. We had displacement higher, displacement lower, right? What do you see right here again? After the sweep, we had one big candle, one on the left, one on the right. It doesn't matter how it's structured, it doesn't matter how close the wicks get, as long as they don't exceed this wick, the high of this wick. That's when they're accounted, right? Same thing happened. And that's a short situation. We can see right here again, buy side was established pretty obviously right here. Sell side was established pretty obviously right here, right? It's the extreme high and low within the trend. They did fail to sweep this one, right? So that's a sign. Price went down, swept the high, came down, eventually swept the low for an actual displacement. And you can see right here, it's the same thing. One wick, left side, right side. So when these things happen, I can see that the and act on that and have that be a prerequisite for like if I actually missed the displacement and I'm seeing price as it's taking off from the POI post displacement, then I can look for a few things and a few signs and discount via price that kind of lead themselves and to show like, hey, this is a high resistance liquidity. We're getting ready to go up or down, right? And this happens every single time after buy and sell side is swept, literally no matter what, right? Same thing right here. Let's just say you're short GU like I was the other day before all the risk tone changed, right? Oops. And to move this to clean it off, we have a weekly order block right here. Price swept buy side liquidity right here. There was an extreme high and an extreme low within the range, right? So this is the displacement that they're going for. If they are short, then they're going to be going to from the displacement from here. But if you zoom out, you can see this was the highest high, right? It's buy side liquidity, the lowest low. Not this guy, not this guy, the lowest low. Right here, this guy. Was left. They swept the high, right? We're gonna zoom in a little bit. And then what happened, right? Same thing. You had left side, right side, and in the middle, neither of them could exceed it. And we can just keep going with these examples forever. Let's just say USD Swiss franc was recently long. Let's just say, for example, right now USD Swiss franc is falling because of the risk tone changing, obviously. But here's a situation where that occurred as well, right? We had a high resistance liquidity void being formed right here in this area. We'll go up to the daily for a little bit more context. Let's see here. But that's all. That's fine. It shows the same thing. All right, so yeah, hires just liquidity void obviously forming here. I don't know any previous context, but I'm trying to show you where it definitively went long, and price came back down, hit the 50% of this POI right here, continued up. Nothing really showing that it was long until we swept this high right here. This box out liquidity. This was the extreme high within the range, and then they failed to sweep this guy and this guy from here to here. So it was obvious high resistance liquidity void. Price established a high, established a low, came up, swept the low, swept the high right here. That's displacement. And then you can see internally, right? They also did the same thing. So this would be setup number two, where they establish a high, establish a low within internally, as in like within the bullish trend, right? Within this guy right here. That's what I mean by internally. And then they swept the low right here. Boom. What do you see, right? After they swept the low right here, and then this is the high. After let's put the low, what happens? Zoom in to the price action pattern, and you can see there's a long one, and then two more on the left side of it and right side of it, and they hit an imbalance right here between this candle and this candle. So from the last week right here, this you can see that obviously that this is discount territory for a long for this situation via the displacement here and here. And I can mark that up for you just so you can have a better visual. I'm pretty good at seeing and spotting these things. I've lost a lot of trades in the past to just trying to trade like this and learn how to trade like this. I used to be a support and resistance trader, which there's nothing wrong with that. Break and retest trader, but then I had, I discovered between the other styles of trading and this style of trading that they're all effective, but some of them are just more precise. And they go based off of the things that actually happen commonly in the market physically and not just, you know what I mean? It's more or less speculation when it's actually happening versus you saying, um, it's like if you see it a lot physically with your eyes, like it happens all the time. Every time, and you study the game, right? So we're not in this situation, we're in this situation. You can see where that happens. And then the high resistance to liquidity void formed right here. They never came back and even visited this low even one bit. So that's pretty much all I wanted to show you. It's all in context with and then you can see what they sold off real quick too. I cannot do the examples. All right, so you came off and then they reversed course right here, and there was a big sell-off right here in this area. The liquidity shifted. We got a swing high right here, established. Price swept it, came down, came up. And then we established a high and a low within the range, right? Nothing from here to here shows that we are going, except for the fact that they swept this. And it shows that we are going down. But once they establish a high and the low within the range, I'm going to sweep that high, and then come down and obviously sweep the low. Then you once they obviously sweep the high, this establish the high and the low within the range, sweep the high, kind of sweep the low, that's displacement. You can see the algo price pattern, which printed itself after the sweep. You can see that there is a wick right here, and you are going to count the highest high, right? One out of the right side of it. Same thing here as well. On the way down, we expected this POI right here, this flyover block, obviously pretty decently nicely. And then we came back down, same thing, a wick, left and right side, showing that they were going. So then that ended up being displacement. Displacement happened right here in this area from here to here, and then they swept. At that point, you know what to do. High and low swept displacement. It's short at the time. This imbalance would be a very good target because it was the last POI that was left before the displacement. You can see where the candle stopped. We even established a high and the low right here and swept that high as well, and then came back down. So either way it goes, the limit order would have been fruitful right here if you would have been keeping track of the fundamentals at the time. Put it right at the top of the imbalance and maybe have your stops at best behind this high, or if you go for like a 1-to-1 or a 1-to-2 if you wanted to, but I would have kept this short just because your liquidity and how it's structured would kind of determine the stop loss. So this would have been a wider stop loss. At this point, I would have kept mine at like a 1.2 to 1.3% gain. I would have expected it to basically come for some form of sell side liquidity back down here in this area for these lows right here. I would have kept it at like a 1.25 or maybe even a 1.5% gain, but I would probably stop it just short of this low. Because it's about what the structure allowed for it to happen, right? Not all trades are going to be exactly 2%. Sometimes you'll get again 1.73% because you have to follow my rules and put my stop loss behind where they failed, right here or right here. And then it's not likely to come back up there based on all the context that you had. So then you have 1.59 there. And then you have the same thing happen again with short again. Recently we had a high and a low established. They came up, they swept that high, and now they're obviously pushing more towards that low, this being the target because it was the one that was left. It's a recent one showing that it's continuously going down and chasing that over time. So I always count the extreme low and the extreme high, right? We swept that high right here at the time. And now we're coming back for these lows right here. And this is after a previous displacement. So we can just keep repeating this process over and over again. And what do you see happening, right? The wrist tone, we could have taken this trade with the wrist tone even. Same thing happens. We have high and on the left and right. And if you really wanted to count this one, you could, but either way, none of these always count them directly to the left and right of it. None of these they didn't sweep it. So high resistance liquidity void from right there, and you have all this previous context. Boom, sweep the high. Price absolutely falls down, and that's another thing. After the highest swept or the lowest swept, you'll always have aggression, right? Look at the difference between the candles. Huge candles, huge candles, huge candles. You can see all over the volume. And they're actually coming from buy and sell side, and they're actually switching liquidity. You can see the volume in the market in those times. Same thing here. When they swept this high, volume, tons of volume. Establishing the high and the low, swept it, tons of volume. And that's why I like trading like this, because it allows you to get precisely when you do it correctly on very high volume trades that typically fly straight to TP pretty fast, right? If you learned anything in this video, go ahead, share it with a friend. Subscribe if it applies to you. If you're not in the group, it is free. So hop into the group and you could be getting all of this value. And remember, once again, guys, for the last note, part of this is in context with fundamentals. I'm not just trading price. This is just how I enter the market and what I look for. But I want to share that with you in context with everything else I've shared with you so that you may have that. See you guys in the next video.